Hey, good morning. Let's go over today's trade plan. So as I covered in Friday's recap video, the short-term bias was on the short side, and in the overnight session we had resistance at 46 to 48. That's the area that ended up capping the upside in the overnight, with the overnight high being at 48 quarter. So at this point, heading into the open, we know that short-term, the sell side is in control, but on the downside, we are heading into some support zones where responsive buyers can be active because, on the larger time frames, the uptrend can still remain intact, and because the bigger picture bias has been bullish, buyers can step in on first test of every support zone and start turning things around. So even though short term the sell side is in control, it doesn't mean that that has to be the case by the end of today or by tomorrow. So we do have to be a bit cautious on the short side if the market is already trading at pretty low prices, and just be aware of the overall context and trade location. So for example, shorting the 46 to 48 area was perfectly okay, but now with ES trading right below Friday's low, it's a bit risky because off the open we could get responsive buyers active either right here around 36.38 or at the naked VPOC at 33.75. The primary support on the downside, which can be tested off the open this morning, is 28 to 30. That's the safer area to fade this downside push, and buyers can be active at 28 to 30, and it's an area where the selling could even shut off, and then we could see a turnaround and a move back up towards the 46 quarter gap and the 47.5 to 49.5 initial resistance zone. This is really going to be the key resistance on the day, and if we break out above 47.5 to 49.5, that would completely shift the bias on the day. That would be a balanced breakout from Friday afternoon range and the overnight session, and at that point we can get some continuation and a move up to 55.5 to 58, potentially even a little bit higher. Of course, first test of resistance can still attract sellers in this market, but a breakout above 47.5 to 49.5 would tell us that the downside could be limited now, and a significant low could be in place. So as far as the day's context goes, short-term bias, we know the sellers are in control, but bigger picture is bullish, so buyers can step in at any of these areas. Right off the open on the very small time frames, keep an eye on 38.75. If the market has trouble holding below 38.75, that would also be an indication that the market is no longer as weak, and that could result in a move up to the gap fill at 46 quarter, a test of 47.5 to 49.5, and then this is really the primary inflection point on the upside. If we break out above here, then you want to be cautious shorting it, perhaps get on board on the long side, targeting a move up towards the 55 area. And then on the downside, 28 to 30 is the primary inflection point, expecting buyers to be active here. No major econ reports on the calendar today. Volume is running pretty decent, so we could get a decent range, but that doesn't mean that it necessarily has to be completely on the downside. It could just be a wide range balance today. So 28 to 30 is a potential fade spot. If we continue breaking down, buyers can be active at every support zone on the way down, 21.75 to 23.75. Real strong range or wide range could take it all the way down to 14 quarter to 15 quarter, but that seems unlikely at this point. So we're just going to take it step by step, zone by zone, and the first area that the market would have to defend is 28 to 30. So right now the focus is 28 to 30, 47.5 to 49.5 on the upside, 38.75 Friday low right off the open. Those are the main thoughts. Let's see where the buyers can step in, and we'll take it from there.